Hey, how's it going? Tyler here with Apex Trader. Here's my Facebook, my YouTube, and the trading platform that I use to trade stocks, Webull. Now, in today's video, I'm going to be going over very important information containing reversal patterns. Now, you might be wondering, what the heck is a reversal pattern? Good thing I'm here today because I am showing you exactly what they are. These are the wonderful and glamorous reversal patterns within the candlesticks. If you are unfamiliar with the candlesticks, go to my last video. I also have a PDF on my Facebook group page where you can read up about them, and it will show you exactly what a candlestick is. But in case you don't want to do that, I will talk about them really fast. Pretty much, this for an example, these are all candlesticks through here. And for example, a green candlestick means you have positive price move for the day, meaning right here it opened at 9:30 in the morning and it closed at 4 in the afternoon. You have these two wicks on either end. That's what the price traveled to during the day. It traveled all the way up to a high and it traveled all the way down to a low, but it opened here and closed here. It goes opposite for a red candlestick. It opens here but closes here, so therefore it opened at say $5 and now it closed down here at $4, meaning the stock is going down, and it went all the way up to a high and then it went all the way down to a low, and these are called wicks. Alright, enough about explaining what a candlestick is, and let's get on to the reversal patterns, which we have been waiting to talk about. So the very first one we have right over here is called the hammer. The hammer is a one single candlestick pattern that happens at the bottom of a downtrend. And what this resembles is a ton of buying pressure. And a ton of buying pressure is going to send a very long wick with a very, very small real body with no top wick. That's telling you that it's like selling, and then it's like, comes right back up because everybody's buying, and it will be followed by an uptrend. Now, the hanging man is practically just the opposite of the hammer. It happens at the top of a uptrend, and it is signaling selling pressure and is going to be followed by a downtrend, becoming bullish. Moving on to the bullish engulfing. The bullish engulfing pattern right here is this. You are on a downtrend, and then all of a sudden on this day you have a green candlestick, and the real body, just the real body, not the wicks, but just the real body, can completely engulf the entire little tiny red candlestick the day before. That is why they call it a bullish engulfing pattern, because once again it is signaling a ton of buying pressure and nobody is really selling. More buying than selling. And bearish engulfing is the exact opposite. You have an uptrend and then everybody decides to sell because it's at a high, and therefore you have a red candlestick that completely engulfs the green candlestick next to it. Moving on is the piercing line. This is a two candlestick play. They happen at the bottom of a downtrend, because what happens here is you have a red candlestick and it closed here. But now what do we know about a green candlestick is they opened here. So overnight, meaning the after hours and the pre-market hours, it gapped down, and at 9:30 in the morning it opened here and came up and pierced into the red candlestick, indicating once again a lot of buying pressure for it to move on to an uptrend. The dark cloud is practically just the opposite of a piercing line. As you can see with all of these examples, there is the opposite for almost every single one of them, which is extremely nice because once you know what to look for, they appear everywhere when trading stocks, and it is key. It is extremely key to know these because you can buy stocks based just off of these reversal patterns. Moving on to the inverted hammer. The inverted hammer and the shooting star are a lot like what do we know? Right, the hammer and the hanging man, except the only difference is the wick. The wick comes up this side when it's done with a downtrend and everybody is buying. The wick goes up. Now the opposite with the shooting star. The wick is going to be way up here on top, signaling a ton of selling pressure. Now, not too bad, seems pretty simple. You got some really good reversal patterns right here. But little do you know, we have more to talk about. We have the morning star. The morning star is a 3 candlestick play. Once again, this is exactly what it looks like. It's a star down here. It's casted away from the other candlesticks, and it resembles a uptrend. The evening star, which kind of goes along with nighttime, you know what happens at night, which is also when what goes down, the sun goes down along with the stock. So the evening stars happen at the beginning of a downtrend. The morning doji star, I see these everywhere, believe it or not, especially on the 1 day candlesticks where every single candlestick represents 1 day. Because as we did talk about previously, is there are many different time intervals that you are able to use the candlesticks. You can have 1 minute candlesticks, 2 minute candlesticks, 1 hour long candlesticks, 1 week candlesticks. You see the point that I'm trying to say. You can have many different time intervals of the candlestick, but I mostly see the morning doji star and the evening doji star on the daily candlesticks, which make it great for swing trading. Because when I see a morning doji star through personal experience, I am waiting for the next day. Remember, just because you see a morning doji star does not mean you buy on the day of the morning doji star. You have to have the complete set of the 3 candlesticks, which means you wouldn't buy until you get a confirmation the next day that this is really what it is doing. Because in the incidents, you buy and the next day it just continues going lower. It then broke the reversal pattern and will no longer continue on an uptrend, but continue on your downtrend, and now you're stuck holding a position. So do not do that. The key to every single one of these patterns is to wait for the confirmation day, which is always the day after, to verify that that is the direction that the stock is going to be traveling in. And you can see that for every single one of these. Moving on to the Bullish Harmony. This is exactly what it looks like. Once again, it's just signaling a ton of buying pressure. Moving on to the Bearish Harmony, which is just the opposite of the Bullish Harmony. And then we have the Bearish Harmony Cross. I see these quite a bit too, where you have a nice uptrend, nice healthy green candlesticks, and then just out of nowhere, one day, you will get this, and it's kind of like, wait a second, what is that? That is perfectly resembling nobody is buying, but everybody is selling. So you really got to watch out for that one because it's sneaky. You might not really think to look out for this little green candlestick, but that's a very good sign of a downtrend about to happen. And same thing with the Bullish Engulfing Cross. You will have a downtrend, and then you just have this really little tiny candlestick. It doesn't have a direction to it or nothing. It's just there like a plus sign, and that is going to resemble, once again, the stock having a ton of buying pressure and moving on up. Now we have the rest of these. We have the bullish belt hold, which, as you can tell, you have a long line of red candlesticks representing a downtrend, and then all of a sudden a very nice and green, massive green candlestick. I really like it when a nice green big candlestick arises, because it is just perfect. It is perfect for buying points, especially the next day if it continues, because that says it all. That definitely states everybody is buying and nobody else is selling. And it also most likely means that this is going to be where your support line is, which I did cover that previously. Moving on to the bearish belt hold, which is just the opposite, and the upside gap two crows. This is a bit, I don't want to say consolidation, but that's kind of what it does for 2 days. In the instance that we are talking about every single candlestick being daily. You will have two candlesticks that kind of consolidate before they finally end up at the direction that they're going to go in, and they're going to be red. You won't have a red and then a green. You also won't have a green and then a red. They will both be red. The three white soldiers. This is a very popular play. Almost everybody knows what the three white soldiers are. They are extremely popular. But you do not buy until the third day. Otherwise, it's not called a three white soldier. As you can see, you have to have three candlesticks for it to be called the three white soldiers. So you will not buy it on the second or on the first or second day, but on the third day. That is the confirmation day. When you are going to be looking for three white soldiers, that is the day that you look for to buy on. And followed by the three black crows. This happens at the top of an uptrend, and it signals everybody selling once again, and you will have just the opposite. You will have three red candlesticks, and the price is going to continue off of those. And we have these last two, the bullish melting line and the bearish melting line. It looks exactly how it sounds. And yay! We have some more to talk about. At this point, I'm not too sure if I really need to explain anymore, as I'm pretty sure you have the gist. You can pause the video and look at these as much as you want. They are very useful, and you really want to memorize these and get these down so when you are looking for stocks and you spot one, you automatically know, okay, this is what this is, and I want to be aware of the confirmation. That is extremely important, and that is definitely something that you would put in your watch lists, is if something like this arises, to watch it for the day of confirmation. That is it for the reversal patterns of the candlesticks, and once again, I'm here at Apex Trader, my Facebook, my YouTube, and the trading platform I use. But before we end out this video, I have my Trade to Trade Well fancy green notebook. And I'm going to state one of my checklist before buy rules. And the one that I'm going to talk about today is, what time of day is it? You might be thinking, what does that have to do with buying and selling stocks, the time of day? It has everything to do with it, believe it or not. Sometimes not, but most of the time of the day of buying and selling stocks is very important. The reason for that is, on the East Coast, as you may know, the stocks open at 4 in the morning. And the opening bell is at 9:30 in the morning. So we have like 4.5 hours of pre-market. Now, a very important thing is, if I were to wake up at 4 in the morning to go look at my stocks, I would definitely see some pretty good moving stocks on the top gainers. And they will last for about 2 hours when everybody else starts to wake up at 6 o'clock. And once 6 o'clock comes around, I normally see a whole lot of selling pressure in the pre-market. And because everybody's waking up and going, oh my gosh, I just made X amount of money, I'm gonna sell. They're like, oh wow, yeah, right on, cool, sell. Just made profits for the morning before the market even opened. And you will have a lot of stocks that fall around 6, 7 o'clock because of everybody just waking up. Now, the second time of the day that I normally wait, I don't buy. I rarely buy during the times of 9:30 when the market opens up until about 10 to 10:15, because there are a whole lot of limit orders waiting to be filled when the market opens from the overnight. And with this being said, the first 30 minutes to 45 minutes of the day, all of these stocks are extremely volatile. And sometimes I'm not looking to be into an extremely volatile market first thing in the morning. I want to wait for it to cool off and then understand the overall direction of the day. And with that being said, we move right on into lunch. Lunch happens around 11 o'clock to 1 o'clock. That's where a lot of investors exit out of their positions, especially if they're just in the market as day trading. They're going to exit out of their positions to go grab lunch, fill their tummies up before they get back to trading. So a dead time in the market is right around 11 o'clock till about 1 o'clock. And then, of course, by that time, you have 2 to 3 hours before the market closes, which at that point, the day is has already picked its direction, whether it's going to be going up for the day or if it's going to be going down for the day. So with that being said, I really hope I explained that the time of the day you decide to buy stocks is important. Alrighty, see ya.